We're joined by Justin Kuczmarski. He is the president of NAV, or is it NAV Valuation?
NAV.
NAV. Okay, great. Thanks for coming in. We certainly appreciate your time. I want to just right off the bat get your thoughts on the Fed decision. Was it the right call?
Well, thank you, Sean, for having me on. I think it's the right call. Powell has built a career. Remember, Powell was appointed in 2011 by Obama, the first Republican appointed by a Democrat in many years. So he's been a governor or a chairman since 2011. It's the right call. Powell's doctrine is wait, see, move quickly. He had noted several times in no uncertain terms that the goal is to wait till the data comes in and to move quickly. So adjusting to tariffs, whether it moves rates up or rates down, depending upon the data, Powell is sticking to his guns. I think that's the right approach, to wait and see and move quickly for now.
Yeah, and think back at what, 6-7 months ago, inflation was just about 2.1, 2.2%. So let's go to now fast forward to this news conference today and talk about the central banker's biggest concerns. Clearly, the concern that tariffs are going to bring higher employment as well as higher inflation.
I agree. I mean, the data is not to come in yet. It's going to be about 3 to 6 months. Right now, Powell conceded that households and business sentiment is down, but he also noted that the first 3 months, jobs growth in the U.S. averaged 155,000 jobs per month. GDP was only down 0.3%. So unemployment has not emerged. Powell is waiting on unemployment. If unemployment can stay near maximum full employment, right now between 4 and 4.5, Powell will ride this out as long as he can and let the Fed play its part. So he really is in a true wait and see. If the data emerges, he is vowed to move quickly to raise rates to sort of curtail inflation. The data is too far ahead in the future. I think the next 3 to 6 months are critical. If the U.S. administration can strike deals and this tariff uncertainty goes away, at least in the near term, I think he's in a good position, but the data has to come out and the deals will be struck in the next 3 to 6 months.
Let's talk a little bit more about that. You say 3 to 6 months, because clearly he wants that wait and see, but people are frustrated. They see prices are not going down, they're going the other way. They're very concerned about everything coming in from China now is on hold. They've seen the images of ports in Los Angeles and other areas that are simply not doing the business that they used to. So how long can Powell wait to see what the tariffs do?
I think it's a key question. You nailed it. I think Powell's natural inclination is to wait. He is a hard data person. He likes to be right and likes to move quickly, but there are risks. If prices solidify, the key term you hear from the market commentators is anchored. If people start to expect prices and businesses build them in, it becomes very sticky. And once there are sticky prices, it will take a couple quarters at best to unwind those, particularly in the service sector. No one's talking about the rise in services costs. Everyone's focused on the goods, as you noted, that you can buy and goods that can be purchased online. But if services adjust to also higher prices, I think you have a stickiness there that'd be really hard for the Fed to explain, and really be a lot of criticisms towards Powell's wait and see, which is really being put to the test in this highly charged environment.
It is highly charged, and certainly there is a certain degree of tension from the Oval Office to the Fed. Trump has repeatedly asked Powell to bring down interest rates, and Powell is not going to be bent on that at all. What do you think about this relationship? And there's some discussion. Does Trump have the authority to fire Powell? A lot of people say absolutely not.
It's a legal question, obviously not an attorney, but I think what you look at 2 weeks ago when Trump was making headways about firing Powell, the markets didn't react well. So I think Trump, if he waits to the end of Powell's term until May of 2026, puts him in a natural bind. He has to expect that Powell will do the right thing and time it perfectly. Trump's criticism of Mr. Powell, Chairman Powell, is that he's Mr. Too Late. But the words will not move policy actions. And I think the Fed really has to stick to its gun and hope that their timing is not way off. If it's way off, the U.S. and global economies will have a major problem on their hand. But I think legally, Trump really has to go down and think about this. To remove Powell would be a really major mistake in terms of how global markets perceive the independence. Remember, our international bond investors, China and Europe, like the independence of the federal chairman that rides out administrations. Powell's in his 5th administration since 2011. So having the independence of the Fed is something the market likes, whether Mr. Trump likes it or not.
Yeah, and one thing today Powell said was he's never asked for a meeting with the U.S. president and never will. So I thought that was interesting. Now, we've heard inflation, we've heard recession, but now stagflation conversations are beginning to pop up. First, break down what stagflation is for us, how that is different from a recession, and your concerns about this.
It's a great question. Stagflation usually comes from shocks. In 1979, there was the oil shock from the Middle East crisis. It's that rare time where inflation and interest rates do not move in the opposite inverse direction of unemployment. If we have a jolt from tariffs that pushes up interest rates to combat higher inflation from good prices and unemployment because demand moves in different directions from the supply side, we could be in the U.S. a period of maybe 3 to 6 months or possibly a year where you have declining GDP in a recessionary environment with high prices and high unemployment. It would be the worst possible scenario. Switzerland yesterday, the central bank, had noted potential for a deflation environment and possible stagflation. So it's one of those things where we have to keep a close eye on it, and it's something where the U.S. has to lead, hopefully, in the right direction.
Okay, Justin, we have about 25 seconds. Give me your outlook for U.S. growth in the second quarter.
I think it's really muted. I would say maybe 0.5 percentage points of GDP to 1%. Remember, the pull on GDP, a subtraction is imports. So you have to look at that as pulling down the economy. It only was 0.3% in the last quarter. So in the last GDP period, I think looking at 0.5% to 1% of GDP, definitely not 2 to 3% if we had this uncertainty related to imports and tariffs is going to wane through its data. I think the second quarter and third quarter data could be really, really messy and hopefully does not cause more future market gyrations.